buy a house now when the home loan interest rates are so low? In Ask Track to Realty series, this is the question that has been asked by a home buyer. I am Ravi Sinha, and I would like to address this question from the perspective of macroeconomic picture as well as housing market in today's context. First of all, a home loan interest rate has never goaded the home buyers to the housing market. Home loan interest rates are just one of the catalysts that drive the property market. For an average home buyer, the salaried class home buyer who borrows money to buy a house, what comes first is his job safety. In today's COVID hit market, job safety is a huge challenge. Then the next thing to keep in mind is inflation. Even if your job is safe, are you in a position to save money to the extent of paying the EMI? Only when you address these two questions, job safety as well as inflation, then only you can think of borrowing cost. As a matter of fact, I will talk about some of the statistics today. The Indian housing market has been at its peak even when the home loan interest rates were high. For example, the interest rate hike in year 2011 was 13 times. The market was still at its peak. In 2008, the home loan interest rate was 10.25%, and from there it skyrocketed to 13% in 2012. The market was still at its peak. The market was doing much better, property market was doing much better than what it is doing now. So interest rates are not the catalysts. What you should keep in mind is your job safety, inflation, and then the interest rate. Having said this, it's not just these three things which can drive the property market. You should also keep in mind, because when you say you want to buy a house, it's not necessarily for self-use, right? If it is for self-use, then the three parameters of job safety, inflation, and interest rate matter. If this is your second property and you are buying it for rental returns or capital appreciation, then there are certain other dynamics, certain other metrics that come into play. Capital appreciation has been almost non-existent for the last 3-4 years. In all probability, you will not see capital appreciation in the housing market in the next 3-4 years. As far as rental yield is concerned, the gap between rental yield and borrowing cost is 500 basis points in India. This is the highest in world. Across the world, on an average, the gap between borrowing cost and rental return is around 100 basis points. In certain countries, the gap is inversely proportional. That means your borrowing cost is lower than your rental returns. The only parallel to India is probably China, where the gap between borrowing cost and rental return is 300 basis points. In India, we have 500 basis points. Moreover, coming back to the lower interest rate also dents your household saving, because whatever money you must have saved in fixed deposit or other instruments is not giving you high returns now. So a lower cost of borrowing is not necessarily going to help you. That is one of the reasons that post-COVID, the LTV, loan to value, of the home buyers have decreased. most of the home buyers are borrowing as less as they can. And if they have to buy a house with 80% borrowed money, then it's not advisable, neither for self use nor for the rental returns or capital appreciation. So, in conclusion, I would say that don't get tempted by lower interest rate. Lower interest rate is a double-edged sword in housing market.